Hi, I'm Jack from the Global Compliance Institute. And I'm here to assist you in understanding FATCA and CRS. This video will explain the W-8BEN-E FATCA Form to FATCA Responsible Officers in foreign financial institutions worldwide. There are three main topics that FATCA ROs should clearly understand. Firstly, the purpose of this form. Secondly, who should fill it. Thirdly, how to complete this form. Now let's go through the topics. Firstly, what is the purpose of Form W-8BEN-E? W-8BEN-E is a certificate of status of beneficial owner for United States tax withholding and reporting for entities. As discussed in our previous videos, FATCA W-9 form can be completed by either individuals or entities. While in the IRS W-8 forms, there are two different forms. One for individuals, W-8BEN, and another one for entities, W-8BEN-E. The W-8BEN-E is the form that FATCA ROs should take from their corporate clients to document their U.S. tax status. Foreign persons are subject to U.S. tax at a 30% rate on withholdable payments, which is the income they receive from U.S. sources that consist of interest, dividends, rents, royalties, premiums, annuities, compensation for or an expectation of services performed, substitute payments in a securities lending transaction, or other fixed or determinable annual or periodical gains, profits, or income. A withholding agent or payer of the income may rely on a properly completed W-8BEN-E to treat a payment associated with the W-8BEN-E as a payment to a foreign person who beneficially owns the amounts paid. If applicable, the withholding agent may rely on the W-8BEN-E to apply a reduced rate of, or exemption from, withholding at source, also known as a tax treaty benefit. Now let's move to the next point, who must provide Form W-8BEN-E. As per the IRS regulations, entities that must complete this form are 1. A foreign entity receiving a withholdable payment from a withholding agent. 2. A foreign entity receiving a payment subject to Chapter 3 withholding. Now let's discuss those two types in more depth. For the first type, for example, a non-U.S. entity receives dividends from U.S. sources on its account at a bank. And this is the most important information for you as a FATCA RO. For the second type, Chapter 3 withholding applies only to payments made to a payee that is a foreign person. It does not apply to payments made to U.S. persons. FATCA is found in Chapter 4 of the IRS, so this is not for you. As FATCA RO working at a foreign financial institution, you may not exactly understand which of your corporate customers should complete this form and when. Probably all of your customers are non-U.S. So, shall we monitor all the accounts and investigate all the incoming payments to see if withholdable payments are coming through? Don't worry, I'm here to help and make it easier for you, especially in how you can identify the reportable account. So, and in a practical way as we do in our study guides here at GCI. You should ask the following corporate customers to provide you with the W-8BEN-E. 1. A financial institution. 2. A non-financial entity owned by one or more U.S. controlling persons. 3. Any entity businesses that are receiving payment from U.S. sources through self-declaration. Let's have a look at these three in more detail. First, financial institution FI. As per FATCA agreements with the IRS, when you deal with an FI you should determine if the financial institution has what is called GIN. GIN is an abbreviation of Global Intermediary Identification Number. The financial institution gets it when it is registered and approved by the IRS. The GIN should be provided within the W-8BEN-E form and verified through the IRS FFI list. It's important to understand that FI's definition by the IRS is not exactly what we may know. The term financial institution means a custodial institution, a depository institution, an investment entity, or a specified insurance company. From this definition, institutions like exchange houses and microfinance firms may not be considered as financial institutions per FATCA. The second type of corporate customer, who should provide the W-8BEN-E form, is non-U.S., non-financial entity, owned by one or more U.S. controlling persons. The term controlling persons means the natural persons who exercise control over an entity. In the case of a trust, such term means the settlor, the trustees, the protector, if any, the beneficiaries, or class of beneficiaries, and any other natural person exercising ultimate effective control over the trust. The term controlling person shall be interpreted in a manner consistent with the Financial Action Task Force recommendations. Most of the countries consider the percentage of 25% and more a controlling percentage. If your country didn't sign a governmental agreement with the IRS, you will be required to identify the U.S. owners who own more than 10%. Now, we understand the purpose of the form and who should complete it. Let's move to the third step and take a look at the form itself, and show you how it must be completed. This is what Form W-8BEN-E looks like. As you can see in this section, customers should make sure that they are using the correct FATCA form. They should review the situations listed and not complete the form. If any of these situations apply to them, use the form indicated instead of Form W-8BEN-E. Part 1, Identification of Beneficial Owner. 1. You should enter the full name of the legal entity that is the beneficial owner. The entity name should conform to the name as shown in the formation document, including any amendments. 2. You should enter the name of the country in which the legal entity was created, organized, incorporated, or governed. 3. If you are a disregarded entity but are not a financial institution, leave line 3 blank. 4. In Entity Classification Chapter 3 Status, mark the one box that applies. You should determine the classification of the legal entity based on U.S. tax principles. As we said, you can skip this section since FATCA is found in Chapter 4 of the IRS. 5. In Chapter 4 FATCA Status, mark the one box that applies and completes the part of the form associated with that FATCA status. To determine whether a particular FATCA status applies, you can read the qualifications for that status as set out in the part of the form associated with that status. If you are dealing with an account of a financial institution, they will probably choose Participating FFI, Reporting Model 1, or Model 2 FFI. If you are dealing with a non-financial entity, they will probably choose Active NFFE. In some cases, the entity may choose Passive NFFE. This FATCA status is important for FATCA reporting if there is one or more U.S. substantial owners. An active entity is an entity that receives less than 50% of its gross income from a passive income. A passive income means investment income, which may include dividends, interest, annuities, and rents. Most of your customers would be active. For example, if you are opening an account for a hospital where most of their gross income comes from practicing medicine, that's an active NFFE. While if 50% or more of their gross income comes from rents, which is unusual, that is a passive NFFE. Now let's move to the next point. 6. Permanent residence address. You should enter the permanent residence address of the entity. The permanent residence address is the address in the country in which the entity claims to be a resident for purposes of the country's income tax. If the entity does not have a tax residence in any country, the permanent residence address is the location of the entity's principal place of business. 7. You can enter the entity mailing address if different from the permanent residence address. In Part 1 Identification of the Beneficial Owner, Point 8. If the entity named on Line 1 has a U.S. taxpayer identification number, listed here. In 9A. GIN, if the entity named on Line 1 has registered with the U.S. Internal Revenue Service as a participating foreign financial institution, a reporting Model 1 FFI, a reporting Model 2 FFI, a registered deemed compliant FFI, or a direct reporting NFFE, they should list their GIN here. In 9B. Foreign TIN, here you enter the tax identification number issued to the entity in the country in which it claims tax residence. In 10 reference numbers. If the entity filing the form is the single owner of a disregarded entity, use line 10 to identify the disregarded entity, which is an entity separate from its single owner for U.S. tax purposes. Part 2. Disregarded entity or branch receiving payment. Determine the entity type. Determine the classification of the legal entity based on U.S. tax principles. This part applies only to a disregarded entity with a JIN or a branch. That is an FFI located in a country other than the country identified on line 2. Part 3. Claim of tax treaty benefits. This section is for Chapter 3 only. From Part 4. Scrolling down to Part 28. These are the FATCA statuses that we have explained earlier, where the entity should check the box on the applicable FATCA status section. In Part 29. If the entity FATCA status is passive and has one or more U.S. substantial owners, they should list the U.S. owner's name, address, and TIN for reporting purposes. You can fill out up to 9 owners. That's because no entity will have more than 9 owners with more than 10% ownership. In the last part, the person completing the form should certify that they have the capacity to sign for the entity identified on line 1 of this form. They sign, enter their names and the date of filing the application. That's it for this video. For more information, visit our website at www.gce-ccm.org to register in our FATCA and CRS certification program or our comprehensive course, the Certified Compliance Manager CCM.